What's up, good people? I'm Zay, and this is First Generational Wealth Builder, where I focus on helping you transform your money mindset, your money habits, your money beliefs in order to break generational curses and build wealth. And today, guys, I am back with another video to address the question that I've been getting a lot. And that is, what stock should I invest in right now? And every time I get that question, I always ask, well, what is your strategy? Are you trying to long-term invest or do you want to trade it? And so today I'm going to talk about the difference between long-term investing and day trading or swing trading, and talk about why it matters when it comes to choosing what you want to invest in. And as a bonus, I will share a stock that me and my wife are consistently buying through this recession at the end of this video. So if you stay to the end, I got a little bonus for you guys. Now, before we jump into the video, please comment below which strategy you prefer, whether it's long-term investing or day trading. Let the people know how you making your money. But without further ado, guys, let's jump into this video. All right, first, let's talk about day trading. So what is day trading? Day trading is simply where somebody buys and sells a stock or equity in the same day. So that means you bought a stock in the morning when the market opened, and then you sold it in the afternoon before the market closed, and hopefully you made a profit. That is what day trading is. You're trying to buy low and sell high. Now, what are some of the advantages of day trading? Simply, you make a lot of money. You can make a lot of money when it comes to day trading if you know what you're doing. You know, some of the top traders are making hundreds and thousands of dollars a year, and it can be very, very lucrative. Another advantage to day trading is you get your returns faster. So you're in and out of trades within a day. So you're constantly realizing your profit every day you execute a trade and you win on it. So, you know, those are probably going to be the main two advantages when it comes to day trading, and why people like to day trade is because you get faster returns and you can make a hell of a lot of money. So what are some of the disadvantages of day trading? Number one, the learning curve is steep. Over 80% of day traders lose money, as well as they quit within the first 2 years. So the odds are pretty much stacked against you. And the reason why they're stacked against you is for reason number two. The best traders in the world have the best software, they have the best insider information, they have networks that they utilize, they have the best hardware that they're using. And so even still, day trading is risky. And for those who are in that top 20%, they have all of this fancy equipment and information at the hands for them to really have the odds stacked in their favors. And most everyday traders, we don't have access to all of that. And so again, the odds are stacked against us. Number three, it's very, very time consuming. You have to put in tons and tons of hours of research and really understand a company's price movement. You have to figure out the strategy that you want to use. Like, there's just a ton that goes into day trading. It's not as simple as just buying a stock and hoping it goes up and selling at a profit. That's gambling. That is not day trading. And a lot of people will tell you it's that easy, but it's really not. So don't get fooled. And then the last thing about day trading is taxes. So yes, you do get a faster return, but at the end of the year, you're gonna have to pay short-term capital gains tax, and that's taxed at an ordinary income level. So depending on how much money you make, you know, you could be paying anywhere up to 35% taxes on the money that you make from trading. And so you need to be aware of all of this information when you get into day trading and are thinking that it's going to make you rich. So, you know, those are some of the advantages and disadvantages. Just want to put that information out there for you guys so you can understand the risks that are associated when it comes to day trading. And so what does it take to be a successful day trader? Well, number one, talking to some of my friends that day trade and just getting their, you know, understanding their experience and hearing from them. The number one thing that they're going to tell you is discipline. You have to have discipline when it comes to day trading, because you cannot get an emotional attachment to your trades. It has to be all about the numbers. You almost have to be damn near a robot, because you have to go by the strategy that you have set in place. You need to use the tools and the information that is at your fingertips, and again, not get your emotions involved. So the number one thing most successful traders will tell you is that you have to have discipline. Number two, you have to have a fine-tuned strategy. I mean, day traders, they spend hours and hours identifying stocks that they like. They will identify an entry point as well as, where they want to exit with maybe a defined percentage that they want to gain. So again, it's really drilled down to the numbers. It's not like, oh, I'm just going to get in at this price and hope it goes up, and then when it reaches profit, I'll sell it. That is, again, like I said, that is not day trading. That is straight gambling. So don't let nobody fool you. And then the last thing is just experience. You have to jump in and get your feet wet, is what a lot of day traders have told me, is that you will not learn if you don't. You just have to jump in. It's almost like when it comes to learning how to swim, they just throw you in the deep end. You're going to take your bumps and bruises, but over time, hopefully you'll gain experience to get better. And so that's really what it takes to be a successful day trader. Again, like I said, I'm just trying to give you guys information that will help make this easier so you can understand when it comes time to choose what you want to invest in. Because again, like I said, your strategy really does matter. And so with that said, that brings me to swing trading, right? Now, what is swing trading? Swing trading is the middle ground between short-term investing and long-term investing, because swing trading is the same thing. You buy and sell a stock, but instead in a single day, it's within a specific time period. So some swing traders may buy a stock and hold on to it for 3 months or 6 months. But in the end, it's definitely going to be less than a year, because most swing traders are playing trends. So they may identify a stock that they see constantly has an up and down or is trading between a certain range. And so they will identify that low entry point, open a position there, and within that range that they've identified, try to get it as close to the top, and will set the selling price closest to the top. And then, they'll wait, whether it's 3 months, 4 months, however long it takes for that stock to go within that range and reach that point. And then eventually they get out. So that's basically in a nutshell what swing trading is. It's just day trading, but at a longer time frame. Some of the advantages to swing trading are it allows you to naturally play the ebbs and flows of the stock market. So the stock market does not traditionally go straight up. It has its ups and downs. And so by swing trading, you can naturally play those as long as the stock market is on a gradual uptrend. And you can get higher returns if you're willing to stay in a trade longer. So, that's one of the advantages. Another advantage is that by staying in a trade longer, you actually have a chance at higher gains. So most day traders aim to maybe make 3 to 5% per trade in a day, whereas swing traders may say, I want to make 15 to 20% within this 3 to 6 month range if the stock has that much volatility. So swing traders are willing to stay in the trade longer for higher gains, whereas day traders, they are trying to be in and out and make, they're not aiming for higher returns. They just want to make sure that they win. Another advantage to swing trading is that by buying in and out of the market, you definitely identify more opportunities, as well as you have the chance to lower your losses. Because if you're always selling at the peak and buying in the dips, ultimately those times when you would have lost money going down, you're keeping that profit and you're buying in at a lower price. And the plan or the hope is that you buy in on the lows and you sell at the highs, and you do that consistently, and you'll equal up with a higher return. Now, can that be done? I don't even think the best traders in the world can do that. I mean, predicting the market is really, really hard. And so, if you were able to do that, you'd be one rich person, and a lot of people will be calling you. So if you could do that, hey, look, comment below that you are good at that, and I'll definitely holler at you. But no, let's get into some of the disadvantages, right? So some of the disadvantages of swing trading, again, is similar to day trading. It's a steep learning curve. Again, you have to be able to read the charts and understand the technical indicators, and really be into this, really researching these companies and understanding the ebbs and flows of the stock and the ranges that they trade in. On top of that, swing trading definitely requires a different mindset than day trading, as well as long-term investing. So you have to definitely adopt the right mindset to swing trade. And then again, taxes. So just like day trading, swing trading, you're going to have to pay capital gains tax at the end of the year. And because you did not hold them for the stocks for at least a year, you're going to have to pay that short term. And depending on how much money you make, again, it depends on the tax rate. And if you make a lot of money, it could be as high as 35%. So those are just some of the disadvantages when it comes to swing trading. Now, getting to long-term investing, which is my favorite. This is what I do. This is the strategy that I prefer. So when most people ask me the question of what stock should you invest in, and I ask like, yo, are you long-term investing or are you trying to trade? And they ask, well, what are you? I am a long-term investor. And so what long-term investing basically means is the buy and hold strategy. So I'm looking at companies that I plan to buy throughout, my life and hold on forever. I don't plan to sell these companies. I think these companies are going to be around for a long, long time. They are almost essential to the way of life is how I look at it. And I just think that for a company like this to fail, it would take a devastating catastrophe. And so, we're talking about high value companies that have really ingrained themselves in our everyday life. And so when you have that mindset, buying, holding, you're just going to consistently buy throughout time, and you plan on holding it no matter the price. You plan on holding these forever. And so what are some of the benefits or advantages to long-term investing? Well, number one, this strategy is the easiest. All you simply do is buy and hold. You buy it, sit back and relax, right? Number two, less on your taxes. So because you're holding these the stocks or equities that you buy for long term, your tax rate significantly drops down. Once you go past the 1 year and 1 day mark, if you ever were to sell after that, I think the tax will be 15%. Don't quote me on that, but I do believe long term is 15%. So think about it. If you make a lot of money, 100K plus, you're paying close to 30% between, if you were to day trade or swing trade. Whereas if you hold on and make 100K long term, it's only 15%. So, that's 30 off 100K, that's 35,000 compared to 15,000 in taxes. That's a $20,000 difference. That makes a big difference actually. So, that's why long-term investing, for me, is the better route, is because it minimizes your taxes. The last thing I would say is that it's a tried and true method. When you look at a lot of wealthy people, this is the strategy that they employ. I mean, when you hear some of the advice that Warren Buffett gives, he's always talking about buying and holding index funds. You just go out here and look at the guys like Mark Cuban and all these great investors. They always talk about buying and holding index funds, or just buying and holding in general, because in long term is the way to go. I mean, when you extrapolate the market on any 10, 20, 30 year period, over time the market has traditionally went up. And so therefore a lot of investors believe in this long-term buy and hold tried and true method. And so that's some of the advantages of long-term investing. Now, some of the disadvantages is that really you just have to have time on your side. To me, that is the only disadvantage that I could truly think about when it comes to long-term investing, is that you need to have time on your side. So if you're close to retirement age, well, buy and hold may not necessarily be the strategy for you, because you need to live off this money. So you might want to be looking at like fixed income and equities or something like that. But that's really the only disadvantage I could think of. It really helps mitigate risk as far as the risk compared to day trading or swing trading. And so as I said, I am a firm believer in long-term investing and think that a lot of people should go that way. So guys, that is the difference between day trading, swing trading, and long-term investing, some of the advantages and disadvantages to each. And so that's why when you ask, what should I invest in? I always reply, well, what is your strategy? Because as you can see between the advantages and disadvantages of each strategy, that's really going to make a difference in what I recommend or what I say, hey, you should consider looking at, depending on your strategy. So if you have made it to this point in the video, as I said in the beginning, I have a bonus, and I wanted to tell you guys or share with you guys a stock that my wife and I have consistently been buying throughout this recession. Now, I'm going to do a full video on this stock because I think it deserves it, and it will just explain why we are a believer in buying it, but not going to hold you guys up. And the stock that we have consistently been buying is Boeing. So back in March 23rd, we bought about 10 shares when it was around $100. And recently we just added 5 more shares at $124. So we are just a big believer that this is a company that's going to be around for a long time. We do believe that they'll bounce back. And so we have consistently been looking to add more and more to this position as we're in this recession. As long as the price is under $200, we are buyers. And like I said, I'll do a full review on the stock, you know, why we're believers, why we're buying, why 200 is the price point. So stay tuned for that. And guys, don't forget to press that like button as well as that little red button to subscribe. Stick around and check out my next video. And you guys know the phrase. Until next week, stay blessed. Peace out.